Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. What we had today was a little bit more continuation to the downside in the morning and a bit of a reversal in the afternoon that could signal that some of this downside, at least temporarily, is over, and we could look to start to switch gears a little bit. This morning, in the morning call with Brittany, we talked about how on Friday we got that small red dog reversal in the spiders, and then yesterday we got some very mild downside follow-through, but it was pretty unclear whether or not it was time to buy the dip already. We had just barely tested the 8-day moving average, still sort of in no man's land. And today I think it was a little bit healthy to get more downside continuation in the morning, wash out a little bit more, work off some of that overbought condition that we'd built up over the last few weeks. And now I think people are a little bit more comfortable entering stocks for what could be a Santa Claus rally January effect type move. If you take a look at the chart of the spiders, as you can see, reversal Friday, a little bit of downside yesterday to test the 8-day. Then today we came down. We didn't quite hit the 21-day EMA, but we came close to it, put in a doji. A doji is a candlestick of indecision, so it's not necessarily a strong reversal candlestick, but it is a sign that perhaps downside momentum is slowing a little bit, and we could look to identify some select stocks that we want to buy the dip on. And today, with stocks, in a stock-specific sense, there was a lot of action. We talk about the indices have sort of melted higher. They've just sort of been creeping higher over the last few months. But when we talk about individual stocks, there's been tons of volatility, tons of momentum to take advantage of, and that continued today. And everyone on our virtual trading floor on T3 Live was all over it, including with Mark Sperling's trade idea of the week on Monday, which was Tesla, which I'll go over right now. Tesla, basically a German regulatory authority, did an investigation into some of the recent fires they'd seen on their Model S car. And what they found was that it wasn't a systemic problem. They were just one-off situations. And there'd been sort of a cloud hanging over Tesla recently about whether or not these fires were the result of some bigger issue with the technology and with the cars. So this is a big boost for Tesla to get this first piece of really credible evidence that authorities are saying that it is not a bigger problem. It's just isolated incidents. And so when you have a stock that has about a 30% short float like Tesla does, when you get a report like that that gives it some positive press, it can trigger huge momentum, a huge short squeeze, and that's what we saw today. Take a look at the chart of Tesla. As I mentioned, it was Mark Sperling's trade idea of the week on Monday. We didn't anticipate this type of move. We didn't anticipate any type of news like this necessarily, but what we were seeing was that Tesla had a big down move from its highs above 190 that it put in late September, and it was starting to show a few signs of bottoming out a little bit. Last week, it staged a little bit of reversal where it traded down below the previous pivot and then closed back above it. Not a full red dog reversal where it closed and engulfed the previous day or closed back above the previous day's low, but it was a sign that perhaps a short-term bottom was in. You got some nice upside follow-through the following day, but then you'd seen a little bit of a downside probing action in the subsequent 2 days, and then today, sort of out of nowhere, you got that news. And obviously we didn't know the news was coming, but what you did know is that expectations and opinions and sentiment on Tesla had reached very bearish levels. And when sentiment and opinions get climactic in one direction, where when Tesla was trading above 190, everyone loved it. It couldn't do any wrong. Anything that came out negative was shrugged off, and it led to a more of a short squeeze. And then now that it was down trading here below 120 or in the 120s, everybody hated it. Suddenly it's overvalued. Suddenly, all that stuff actually matters. And when you get in both those situations, you have to be a little bit of a contrarian. When it's continuing higher, obviously you don't look to short it blindly, but you could look for potential opportunities where you have reversal type candlesticks, use tight risk management. And then when it gets down to the levels that we saw last week, maybe you look for a reversal type candlestick, which is what we got, and then you see what it leads to, and you practice a little bit of patience with that position. And today Tesla finished up, I think, about 17%. So enormous move. Even after the open, when you had that gap up, there was still time to enter. I mean, there was plenty of people talking about in the virtual trading floor how they got involved after the gap up, because most of the move came after the gap up. And like I said, when you have that huge short interest of about 30%, the gap can only be the start of the momentum for the day, and that's how it played out in Tesla. So this is one that now, almost hit the 145 target that we talked about. So in the short term, maybe a little bit juiced, but definitely with that short interest, I think it could continue higher, and it could be a theme through the end of the year. strong performance by Tesla, maybe back into this 155 range. Then Apple was another one that was very strong. We talked about tech yesterday. We saw red dog reversals in Amazon and Apple, which on the surface would tell you maybe some upside momentum is slowing, maybe some downside probing would be healthy here to test the 8-day, maybe test the 21-day even. But in the afternoon or this morning, we got news that Black Friday iPad sales were much stronger than expected, which led to about a 1% gap up in Apple. And what we talked about is seeing how Apple reacted early after that gap up. Was it going to be an opportunity that people took to sell the news a little bit, to take some more profits after a really strong 4-day move in Apple? Or was it going to be something that would get people back involved to the upside? And the latter is what played out. Apple, really impressive gap and go to erase all of yesterday's losses and even break back above yesterday's high. So Apple looks like it's on track towards that $600 area, in my opinion. I think Apple, in terms of next year even, is definitely a strong, it's a great value, and the technicals are starting to line up with that a little bit better. And then on the flip side, you had some tech. Amazon is the other red dog reversal we talked about. Amazon didn't have any saving news that came in overnight or this morning to lead to a bounce like you saw with Apple. With Amazon yesterday, you saw big-time red dog reversal, and today you got that downside back into the 8-day. Overall, healthy action to see it test the 8-day. We'll see if it can hold the 8-day or whether it needs a little bit of a deeper pullback, which wouldn't be unhealthy either, but one that is not compelling right now, and I would look for a little bit more of a calculated setup. And this morning, in the morning call, we talked about the banks, about how the banking sector is starting to look a little bit better, where you're seeing divergences in tech, you're seeing just very divergent action overall in the market. The banks are starting to be the ones that are seeing money rotate in. But a few of those names showed they weren't ready to bounce yet after this multi-day pullback that we've seen. Take a look at the chart of Bank of America, for example. This is one that was really strong and was one of the better setups, about a month, 2 months ago. But after this really steep move in November, looking like it might want to retest some deeper support levels. Same thing with Citigroup. Citigroup, another one that was really strong in November, but now breaking the 8-day. Looks like it might want to test the 21-day, which is the prior pivot here. So not the most compelling setups right now, Bank of America, Citigroup. The most compelling setup right now in the banks to me is Goldman Sachs. Goldman Sachs has been holding up the best, held the 8-day today, remains in this uptrend, whereas others are sort of breaking their steep uptrends that they put in place. Yesterday it tried to go, was weighed down a little bit by the market. Today, also weak with the market early, but it's one that I would continue to watch it and keep it on your watch list until it has a significant break of this uptrend that's been in place. Then we also talked about the biotechs, and they also were not ready to bounce today, which is what we talked about, how the IBB, the ETF, is extended from its 8-day moving average. When a stock's extended from its 8-day moving average the way IBB has been for more than a week, and even 2 weeks, it looks like it's definitely a sign to take some caution, needs a little bit of rest. We got some downside action today back into the 8-day. It's a strong sector, so it's possible that today could contain, it could be the extent of the downside, but definitely not too compelling right now. Several stocks in the group, BIIB, breaking down a little bit out of that upper wedge, maybe wants to test its 8-day as well. But if we do get a more significant move lower in these biotechs, it's a sector that I would continue to target on dips. I would continue to watch through the end of this year into next year. I think this group looks really good technically, and the fundamental story is matching up with that as well. And there were several individual names, like I said, that had tremendous volatility today. You have to really pay attention to your news flow in this market, and that's part of what the VTF gives you, is you have a lot of subscribers and our T3 Life contributors that are in the VTF, offering tremendous insights. They're very plugged into the news wires, posting news quickly and responding to that news, providing analysis on that news. And we had several stocks today that had huge percentage moves after some noteworthy news in the companies. Molycorp's CEO came out today, is one of the names, said that the company he thinks will be profitable by 2014. Molycorp's been beaten down so much that's all it really took to trigger some upside momentum in the stock. It finished up, I think it only finished up around 2%, but after 2 nice days, the past 2 days, it was actually down prior to that announcement, or prior to those quotes that were attributed to the Molycorp CEO. So that was able to take it back positive and finish with decent gains. It's one that, just see where it's come from. Obviously, the rare earth metals were in vogue in 2011 and have seen a precipitous fall from there. But you consider how beaten down these are. They have a big short interest. Not one that I would look to put in the drawer by any means, but maybe if you're a short-term type trader, this is one that can give you some more upside percentage moves. HLF was in focus as Whitney Tilson, the well-known hedge fund manager, came out and said, I'm sorry, that's what Triple D. Herbalife was that in Belgium, a regulator came out. HLF Herbalife had previously been ruled a pyramid scheme in Belgium, which was a big blow to the company. It's what basically the thesis that Bill Ackman has been pursuing regarding Herbalife, which is why he shorted it. But there had been not much, no rulings in the United States to really support that. And in Belgium, whereas Herbalife had previously been ruled a Ponzi scheme, or a pyramid scheme rather, they overturned that ruling and said it doesn't break any laws in Belgium. So a huge PR win for Herbalife, and something that obviously triggered a big move. You go back, take a look at the chart, and technically, even if you didn't know the news, you could have seen the breakout in Herbalife, and we could get even more of a move. Herbalife, as I said, is a very controversial name. Some very big name short sellers are involved in this name, so there's short interest there that can be fuel for a breakout, and we could see additional upside here as Herbalife makes new highs. And Triple D, I'll go back to that one. That's Whitney Tilson, the well-known hedge fund manager, came out and said the 3D sector in general is a tremendous short opportunity, and DDD in particular, extremely overvalued based on what they have going on right now fundamentally. But as you can see, big downside after that news came out, after those quotes came out, but somebody came in and defended that stock, bounced impressively, put in a little bit of a doji, but all in all, impressive to see it bounce back from that selling after it bounced off the 8-day. And despite that negative opinion from Tilson's the type of guy who, he has a decent reputation, but he's had several calls over the last few years that have not panned out particularly well, and it's maybe hurt his credibility a little bit. So he's not the type of guy that's going to come out and have a negative opinion on a stock and really drive it lower, as appears with Triple D. This is another case of that, but just interesting to note and something to keep an eye on. And the last one, GoGo. GoGo in flight, basically yesterday afternoon announced that they were going to take their operation global. GoGo provides wireless internet on flights, if you've ever seen them, and they got clearance to provide wireless internet on international flights now. So triggered, I think, something like a 15% move yesterday, and today it finished up another 6-7%. So really impressive breakout there, and this is a stock that's definitely come into vogue big time in November especially, and then accelerated higher over the past few days. But anyways, the market remains somewhat quiet, some downside action, some digestion, which is healthy after that Thanksgiving feast. Market was strong for several weeks leading up to Thanksgiving, and then we got that reversal on Friday. So healthy to see a little bit of downside action, but as has been our thesis over the past few weeks, this is going to be an active trader, stock pickers market into the end of the year. There's been such a big percentage move in the S&P that I think people aren't too eager to put new money to work at these levels, but there are stocks that are more attractive, providing some opportunities to generate some alpha through the end of the year, and that's what we try to do on a regular basis on off the charts and in the virtual trading floor on a real-time basis, is try to provide commentary to show you those opportunities and highlight stocks that are in play and volatile and presenting opportunities. This has been John Darsie, your editor-in-chief here for the Daily Recap. We'll see you back here tomorrow morning for the morning call.